Hello, friends. Today I wanted to introduce you to one of our very popular strategies, MIMT Allcap. This is a flexible all-cap core strategy for long-term wealth creation. It's a momentum strategy. The idea is that the purchase price of a stock is not so important. It is when you are entering, how much do you allocate, and when do you exit. Uh, so there can be different price points that you could enter a stock, but the crucial part is when you are exiting that stock. So we'll take this example here, where you could have bought Yes Bank at 100 rupees. It went to 400 rupees. You are sitting on a multi-bagger. You are extremely happy. You are probably thinking that it will continue to go higher. It drops a bit. You've lost some profits. You are still, looking for this leg to come back. It drops even more, comes to 180. You're still much above your purchase price, yet having lost so much of ground of profits, you don't want to sell here. You want to maybe average, and this leg helps you gain confidence that yes, it's good that you averaged, and it'll go back again, and then it drops again, and now you've lost profits as well as most of the capital. And more than this entire pain of 7-8 years, you've lost the opportunity cost of your capital. So not only are you losing your capital, you've lost the opportunity cost of your capital. In a momentum strategy, the same stock would have been purchased at 100 rupees and sold off somewhere here. Once the drop from 390 to 300 happened here, or it could have exited here, somewhere here or somewhere here. But nevertheless, it would have prevented you from staying in the stock from 300 to 16 rupees. So having saved that kind of a capital drop, as well as offering the same capital that you would have recovered from selling out to be used elsewhere in some other momentum position. So this is how you escape the large losses. Now, drawdowns, as you know, are extremely hazardous. The idea is to reduce drawdown and not have deep falls. This is a deep fall that we had. So consider two strategies, A and B. First leg of the strategy, same in both. Stock goes from 100 to 200. Next leg of the strategy, stock drops 25% here in strategy A. Stock drops 12.5% in strategy B. And third leg, third year, stock goes up 50% here, stock goes up 50% here. So the only difference in the two cases is the minor change of drawdown in the year 2. So 25% here, 12%, 12.5% here. What is the net overall outcome? 100 goes to 225 in the first case, and 100 goes to 262 in the second case. So just a minor, relatively lower drawdown has helped you, go much farther ahead at 262.5 versus 225. So that is the power of reduced drawdowns, which very few people actually appreciate. And you know very well that the deeper the drawdown is, the more is the percentage gain you require to even come back to above water. So 60-70% drawdown means 233% gain to come back out, and the opportunity cost of sitting in drawdowns is huge. I mean, you've invested capital. Of course, you're going through emotional and mental trauma. That is we're not even talking about that. But the idea of your capital having being wasted and not using that opportunity to invest in some stocks which may be going higher. So you need capital efficiency as well as reduced pain. So a system that does not allow deep losers is very, very key. Don't fear heights, fear depths. So MIMT all cap and in fact all other momentum strategies are having this core idea that you need to outperform on the upside. So when market is outperforming, you need to outperform. When market is falling badly, you need to fall less. That is also outperformance on the downside. And then when the market is choppy, you can remain choppy along with the market. So let's take some examples here. So bear market post COVID fall. So this entire about 8, 9, 10 months market was in a bear market, and you can see that the MIMT all cap in blue line actually flatted here, went flat here because it went into cash, and then of course it picked up along with the market, slightly outperforming the market even when the markets were not so good. When the markets were really good, 15 months from March 2020 to October 21, uh, markets gained 154% in that period. The strategy gained 272% in that period. So huge gain on the upside. And then when the markets went choppy in the last 15 months, the strategy also is kind of chopped around along with the market. So it's a core strategy for achieving your long-term financial goals, for achieving financial independence. It's a medium risk strategy that can be good for all kinds of markets. It will exit stocks that do not perform. All momentum strategies work that way, so that the survival of the fittest is ensured. You're not sitting in stocks that are not going to perform. In deep drawdowns of the market, strategy will move to cash, so that there is protection of extreme risk uh, in your portfolio, and it attempts to outperform whether markets go extreme up or extreme down. And because markets move in cycles, there could be years when markets don't perform, when strategy don't perform. So ideally plan for 3 4 5 years of your existence in any strategy to make full use of it. So I'll show you what has happened over the last 6 years. So we started this strategy in 16-17. First year was 40% gain versus 23.9 on CNX 500. Next year again was really good, 58.8% versus 11.5. Then 19 was slow at 2% gain versus 8.4. FY20 market fell 28%. This was down 11%. FY21, 76% of the market, almost doubling that of in this strategy, 134%. In FY22, 21% and 65% in FY22. So almost tripling, more than tripling in FY22. So huge gains will come in lumpy fashions. They won't come, every month, every quarter, every year. So if we see the overall performance, absolute returns since April 16 would have been 617% on the Allcap, CAGR at 33.7%, max drawdown at 28%, ROMAD ratio, which is the ratio of returns to max drawdown at 1.19. It's very, very nice. CNX 500 in the same period would have given you 167%, 15.6% CAGR, 38.3% max drawdown, so huge drawdown versus the strategy, and only 0.4% ROMAD ratio. In terms of some absolute returns, you can see from starting from April 16, 100 rupees becomes 697 in the strategy versus 239 on the index. 3-year absolute rolling returns would be, wavering between 130% down to 35% up to 194%. On the index, they would have gone negative for some period, but definitely much higher over performance. 4-year absolute returns just below 95%. So any 4-year period in the last 7-year period, you would have made at least 100% gains compounded over those 4 years. And on the strategy, it would have varied between 10% and maybe 60-70%. In terms of CAGR metrics, you can see CAGR did not go below 20 to 18 or 19% even in the COVID crash, and has remained stable in the 30-32% range. Index was in the mid-teens then. 3-year rolling CAGR, again huge outbeat, lowest being somewhere near 10%. So any 3-year period, you would have made at least a 10% CAGR. So here you can see the SIP comparison. So MIMT Allcap versus CNX 500 if we were doing a SIP. So from April 16, if we started a 10,000 rupee SIP, you would have put in about 8.1 lakh rupees. In the CNX 500 index, it would have resulted in 12.93 lakhs. So a significant gain on top of the capital that you've put in. So 8.1 lakhs going to 12.93 over this period. But if you put it in the blue line, the MIMT Allcap, then your gains would have been at 23.99 lakhs. So huge outperformance and cumulative gain of SIPs over this not so long a period. So SIPs have their own advantages, and this is definitely showing it well here. These are the individual quarterly performances of the index of the strategy. You can see whenever we have a very, very deep crisis, there is outperformance on the upside, and when you have a good outperformance, you mostly have a good outperformance in terms of the strategy. So 21 versus 12 is a little bit of a outperformance by index, but next quarter itself versus 10 you got 42%. Again 23 versus 14, slight miss here, but next quarter 27 versus 6, 30 versus 9, so on and so forth. So it has ways of catching up very quickly. So now we will see some stock stories from MIMT Allcap. The alkyl amine was one stock which we bought at 662 after COVID crash and the market started to rally. And that at that time, the stock had already run up almost, I would say 70 or 80% from its bottom. But nevertheless, in momentum strategies, we don't, we are not afraid of heights. We are afraid of depths. So we bought it at 662, rode it all the way to 4750, and then exited somewhere at 3850 in October 21 with a profit of 481%. And the beauty is that we avoided this fall that came later on. Otherwise, you could have kept sitting here, wasting the opportunity of your capital, and of course, experiencing the pain of losing the gains. Another example, KPIT Tech entered at 111, went to 800, then exited at 572. The give up of profit was more here, and in fact, the stock did go up post that, but that's part of the whole momentum thing, that you can have a large number of large winners of smaller numbers, but you may have some losers of smaller losses. That's fine. Not every time you will be able to get out very near the top, but more or less the idea is that if you're booking good profits on stocks, that's par for the course. Universal Cables, another example where we actually got in almost at the top and it didn't carry after that and it fell down. So we exited with a loss of 32% within a matter of months, but then it lost much more ground after that. So at least you didn't lose more capital or more opportunity. Another one, IRB, we bought in at near 300, but we gotten out near 220, another 20-25% loss here. But this is something that will happen from time to time, because what you're playing on is the probability that most stocks that are in high momentum will carry forward the momentum further, but then sometimes they won't and sometimes they will. Weekly rebalance strategy. So that is the beauty of all my MIMT Allcap, that at least the portfolio is getting reviewed every week so that the decisions are not delayed. It's an absolute momentum strategy that tells us that we are not measuring momentum in any stock versus other stocks. So each stock is being evaluated for its own merit. If that stock has momentum, it will stay. If that stock does not have momentum anymore, it will be removed. It will have up to 20 constituents, so approximately 5% allocation to each stock at the time of introduction of the stock in the portfolio, and only 1,000 crore market cap universe and above stocks are considered. So just to summarize, momentum type absolute universe is above 1,000 market cap, 20 stocks, weekly frequency, recommended capital 5 lakhs to 30 lakhs, and fee is there on the screen. There are 2 plans available. Now you may ask why weekend investing. So the whole weekend investing plan has been. So now you may ask why weekend investing to start with. So weekend investing has specialized in momentum investing from its very beginning in 2016. We run all strategies based on the same engine, the momentum engine. We have a very large satisfied user base of 14,000 and above folks who have been with us since long time and working with multiple strategies with us. We have built a large repository and knowledge base on the Weekend Investing Hub. So a lot of articles, FAQs, videos, how-to-dos, that kind of blogs. Knowledge base is available about strategies, about momentum, about Smallcase investing, about procedures, about processes, so on and so forth. We also have a very well appreciated support service. A lot of people have sent us testimonials. Hundreds of testimonials are available from the Weekend Investing family. And we continue to do a lot of insights, YouTube videos, and market knowledge in general, dissemination of that through Twitter, Telegram, YouTube, Instagram, etc., etc. And recently, for the very first time, any small case manager has started this program. It's called Wild, the Weekend Investing Loyalty Discount Program, where the longer you stay with the strategy, the lesser is the amount that you pay on each renewal. So there's a discount, increasing discount, that is there with each year, and that helps you to stay longer with the strategy and get the full benefits of a entire cycle of the market cycle from the strategy. So this is all I had for this introduction. Please go ahead and subscribe if you like, and if you have any queries, please send us email to support@weekendinvesting.com, and we'll see you soon. Bye.